Today, every day, small cap investors visit Agoracom knowing this is the day to discover the world's next great company, to have their dreams come true. That's why I take to the open road, to find them, to tell their stories, to engage them, to bring them to life, because they want to connect with you from your office, your phone, your home, anywhere. Agoracom, find your dream.
Welcome to Beyond the Press Release, a production of Agoracom, in which we take the time to speak with small cap executives right after big important news. With us today, I'm happy to have him back from London, Steven McAuley. He's CEO at Empower Clinics. The company trades on the CSC and the stock symbol CBDT, great stock symbol. For our friends in Germany, on the Frankfurt under 8EC, and for our friends in the US, on the QB under EPWCF. For those who are new to the story, and there might be a lot of you because Steven basically took over operations of the company in January, Empower is a vertically integrated CBD life sciences company. That sounds like a lot. We'll talk about in a second. And a multi-state operator of medical health and wellness clinics. So that sounds like a lot, a mouthful. More than just lip service. The company has a database of over 165,000 patients. They're generating millions in revenue, with annualized revenue in 2020 looking to be about $5 million. Q3 just came in, revenue's up 137%. Patient visits are up 211%. This is a company that's delivering, but if that wasn't enough, and normally that would be just enough and fine for anybody, their growth plan is to become vertically integrated. They've got a CBD extraction facility in Oregon, got a great joint venture there. We're going to talk about that. Extraction capacity looks like 6,000 kilograms per year to attack an industry that's going to be worth about $20 billion by 2022. So they're definitely on top of things. Steven, welcome back to the show.
Thanks very much, George, and always enjoy spending some time with you.
Well, look, we enjoy spending time with you because you're delivering right now, and that's a big differentiator from companies that are being, really bashed around in terms of market capitalization. We'll get to that later on, but you're delivering. And let's talk about Q3 specifically. You had some big increases in there, some great KPIs. The first one is, let's talk about revenue. You went from, you talk about revenue of $663,000 versus $279,000, basically, ballpark. What do you attribute that revenue growth to just from the clinics?
Yeah, so the 663 that we're referring to, we report all our financials in US dollars. So for any of the Canadian audience, it's kind of about $1 million a quarter right now in our run rates. The most significant event that happened for us was identifying the Sun Valley Clinics acquisition and actually getting it done. We located it, negotiated it. We did a $4 million raise in April, and that allowed us to make that close happen in early May, and then just start integration and implementation. The Sun Valley team continued to deliver. All of the great ladies and gentlemen in the company, I've met all of them. They're an exciting, dynamic group. And what stands out with them is that they just care for patients so much. And it kind of permeates their whole identity. And it gives us an incredible retention rate. So to go back to your question, the financial growth is primarily coming from loading on that acquisition compared to the old Pacific Northwest Empower Clinics network, which was quite a bit smaller than what the Arizona-based group is, and that's what we're seeing. 137% year-over-year growth for the third quarter.
And by the way, that's kudos to you and your leadership. You just took over the company yourself in January or so, and you're able to identify how important Sun Valley was and get it done. I mean, in hindsight, given what's going on with the markets right now, not that it's any of that's attributable to you, but the markets are definitely having difficulty. How big was it for you to be able to raise the funding and get that transaction done just under the wire for the long-term growth of Empower?
Well, in hindsight, of course, it was essential, and imperative. I don't know what we would look like right now without working so hard to really deal with the expense structure in the first quarter, understand how to shift the identity. It's hard to make moves to recreate a brand that needs to be much more diversified, because the old revenue model was simply Oregon State, Washington State, one revenue stream, and really wasn't a defensible business model. Now we're diversified. You mentioned vertical integration. So for me, vertical integration kind of goes down to the farming layer. I don't see us wanting to be a farmer in the current markets that we serve, but we sure understand the power of extraction and an R&D of the plant. And remember, we're in the medical side of the equation, which is hemp-derived CBD products. We're not involved in anything on the recreational side. So, now as I look back, we have a lot more tools to work with. We have approximately 70 employees in the entire group, with Arizona, the Pacific Northwest, and some of our corporate layer, although the corporate layer is very small, generally speaking.
Now, your revenue growth was impressive, and you talk about how you're a real company. What I also love is the patient growth, 212% increase, and that's going from 1,864 patients in Q3 2018 to 5,800 and change patients now. That, to me, that speaks of execution. That's real execution, because you've got patients coming in. First of all, you're happy, but when you're growing by 212% quarter over quarter on these kind of numbers, that's huge. What's been your what's been your secret sauce to not only just have the patients, but have that patient growth?
Well, the patient count are patients that we actually who came to visit us. So patients we also can think of as customers now as well. We've diversified our offering, and we've talked about how we're diversifying the services and products that we're now offering within our clinic network. But these are patients that have come in, that they've had consultations with our physicians. We generate revenue per patient. It's an important high-level leading metric, or KPI, for our business. And we look at these numbers and that patient flow each and every week, each and every month, and we forecast the quarter, and we forecast out beyond that. So that KPI is an imperative. We have 165,000 patients in our entire database. So that's a different type of metric and KPI that we also watch, because it allows us to run new campaigns and offer these new services or additional physician-based modalities, or let that customer base, patient base know that we now offer CBD product lines and health and wellness products within our clinics and within our online store.
So you're given, bottom line is you're giving your existing database a good reason to come back more often at the end of the day. So on that note, let me ask you, this kind of growth, was this a one-off? Or given the fact that, Steve, I've said this on previous interviews, and for people watching for the first time, you're Six Sigma certified. And for people who don't know what that is, look that up. But basically, you are a black belt when it comes to this kind of performance. So I don't think it's a one-off, but I have to ask you: was it just great growth, in this quarter for patient visits, or do you have a plan to take that number from 5,800 to 8,800 to 12,000, in the upcoming quarters?
Yeah. So as we look out going forward, I mean, these concepts of applying, Six Sigma methodology to how we approach each day, and I hope some of that continues to, kind of permeate throughout our own operations team. But I can tell you that the good folks in our key clinics, say in Oregon, Portland, the operations team in the Arizona clinics, they have a very solid understanding of what monthly, quarterly, and annual patient retention rates look like. So we have a certain expectation of exactly how many patients should be coming back in each month and each quarter. So what that does for us is it gives me a level of predictability. So I can tell you right now that our fourth quarter metrics are looking very solid. We had a great October. If you look at just patient visits in the month of October, we know how we're doing in November. Everybody's hitting their milestones that we expect internally. And what we also know is where we're going to be first quarter of next year. We know where we're going to be second quarter of next year, because we know what the renewal dates are. We know exactly when a patient is scheduled for renewal, but most importantly is we proactively remind them using our technology layer. We have an extremely strong and organized communication strategy that involves our text message platform, email blasts and campaigns, and call center activity, so that something as simple as an appointment reminder is going out onto the handset of a patient to make sure that not only do they know that their appointment is coming up, but right in the final days that they actually do show up back in the clinic, and we run through that retention process with them.
I got to tell you, for people watching at home, before I get it, this is commentary for me before I hop into my next question. It just sounds like, it sounds like Empower just has this great comfort, this business comfort around it, which is very important in a time when investors don't know what's happening with companies in the industry. And you're taking this Six Sigma approach, very quantifiable. You've got the numbers, you're increasing, it sounds like you're going to keep on going. So I took a great deal of comfort in that last answer, Steve. I just want to tell you that. But in addition to the growth, you also cut expenses. Just cash flow for operations reduced significantly. So you're not just looking at the top line in terms of growing revenue and growing patient visits, but you're also cutting expenses. How are you cutting expenses? You've got a real operation there, 70 employees, you got real clinics. How are you able to find these savings in order to cut expenses?
Yeah, I guess one of the responsibilities in a role that I have on behalf of our shareholders, on behalf of prospective investors who might be looking at us as an opportunity, and frankly, on behalf of the employee base, we have to have a path of longevity. And to the extent that we identify areas that are inefficient, so what that means to me in the clinic network space, in the first quarter of this year and second quarter of this year, it was imperative that we found situations where if there was a particular location in a market, so let's take the Oregon market and Washington State, there were some small markets that we had legacy facilities in that really were not paying for themselves. And it wasn't going to be prudent to simply operate with negative cash flow on a certain individual clinic, because collectively that brings down the entire company.
Sure.
So we had to make some decisions whereby some facilities, their leases were coming to expiry, and it simply didn't make sense to renew that lease. We're better to shrink our facility base in some of those small markets, bring those resources to the better clinics like Portland, make sure that they're overperforming and growing, and frankly won't be a drag in terms of EBITDA or negative cash flow on the entire overall operations. So we've just methodically have identified what those are, made the difficult decisions, executed on those decisions, and it did impact certain people in those markets, but for the greater good of the entire company, the shareholder base expects us to be pragmatic. And so I expect what will happen in some of these markets that maybe we shut down, that we will circle back in at a later date with franchising. And the other thing that we're doing is we're putting a much bigger effort into our telemedicine platforms so that we can continue to serve patients in those markets remotely. Again, using our technology layer. We are solid technicians. We have a great technology base behind us. Clearly. It would be a shame if we don't utilize it. It's a much, much more efficient way to serve remote markets using telemedicine and a centralized approach.
Again, just an answer that you just don't hear in the small cap space very often. So that's fantastic. Now, 99% of the time, Steve, I would end the interview right there, right? Great Q3, great core business. We'd sign off and say, hey, looking forward to the next one. But you're not a one-trick pony. And you just alluded something franchising, so I was going to bring that up. You're not a one-trick pony. You're going to vertically integrate this company. So you've got a couple of real, and clearly you're not stretching like some other people would, just grasping at straws. There's a method to the madness. So let's go through that, briefly, just to bring people up to speed. Since we're still talking about clinics and people are in clinic mode still, you've got a plan to start franchising these clinics right across America right now. You've made great strides in that. It isn't just an idea. Where are you at with the franchising side, and what can you tell us about whether you've got impending your first franchisees?
Yeah, so the franchise model for me was an important aspect of the Sun Valley acquisition because they had already put together most of the framework. It needed some more investment to finish the franchise disclosure document, build out the display booths and the marketing material to really go ahead and do it right. It's still an early concept in the entire cannabis sector or medical cannabis sector to actually operate and grow with franchising. So we've attended a number of shows. We were in St. Louis, we've been to Chicago, we were in Houston, we were just in South Florida at the Miami Airport Convention Center just this past week for Franchise Expo. And we're getting more and more momentum behind it. We have probably in the neighborhood of approximately 30 solid applications that have come back into us. We've probably reviewed 15 to 20 FDDs, the franchise disclosure document. Franchising is a regulated industry, so there's a process that we have to follow. I would anticipate that we'll have some announcements coming, in the very near future of these early signings. The first few always take longer. The first few signings lead to multiple growth in franchise signing in the future. So we figured we really have the formula down now. It always takes time to get your message across, but we do hear back from prospective franchisees, and these might be investor groups, they might be existing practitioners who have a practice in a given market, they have patients already, but they're looking to diversify into this sector, but also diversify their own revenue stream. It does not make any sense for someone in that situation to try to go it on their own. It's going to be slow. We've got 6 years under our belt. Yeah. We have all of this operations layer down pat. We have all the technical systems. We have the HIPAA compliant EHR systems to manage patients in a compliant manner. And we have a brand that can be just dropped into a particular market. And then our team will come in behind and we're going to make sure that you're successful. There's no doubt about that, because our people, they know how to run patients through these processes. And we've added on the layer of the CBD product line, so retail in the franchise locations. And we know how hot and how much hype is going on in the United States right now for CBD-based products.
And what's amazing is you just completed the acquisition for Sun Valley in the summer, basically, and you're already at this stage where people will be saying, "Hey, franchise would be a good idea, and we might do it." You've already got all the documentation. So essentially, for anybody watching at home right now, Steve, on top of being an investor or potential investor, if you're an American, you could literally buy a franchise right now. If I'm hearing you correctly.
That's correct. I mean, we've done the legal work. That framework's in place, and like I said, it's a regulated industry. We're not allowed to sell franchises unless we've done all the legal work. We have the business model. I mean, our franchise disclosure document is a 150-page document. I mean, this is not to be taken lightly. This is a real investment on our part for the future of our brand. But we really believe that is going to allow us to get many, many more locations under our banner throughout the country. It's going to give us much greater access to patients and patient data. We're heavily involved in working towards participating in clinical trials right now. We have a number of situations where clinical and medical groups, very significant ones, are interested in our data set because we have so much data with the 165,000 patients behind us. That data is going to prove to be valuable to clinical trials and to ultimately new product definitions in the future, as we can help support proving out that these alternative therapies actually work for patients. And the stigmas come down, the regulatory framework evolves,
Sure.
and the market continues to grow. That's where we're positioning ourselves as this diversified health and wellness brand, life sciences brand, to be a thought leader in the industry and to be relevant to the industry. And these additional revenues will come as a result of it.
Sure.
But we're taking advantage of the asset base that we have, or what I might refer to as our intellectual property. Our IP assets will prove to be valuable in the future. We just don't know how valuable yet, but I'm confident that we're onto something.
Now, that's a discussion about the clinics outward, franchising. Let's talk about going into the clinics. You plan to launch your own hemp-derived CBD products. So essentially, you've got.
No, we already have them. We're not launching them. We already have them.
Oh, okay. Tell us about how that. Yeah, I was thinking about the CBD third party, but tell us how that's going.
No, so
the April line is going right now.
Yeah, so we have our own hemp-derived CBD products. So on our shelves right now, we have 4 specific formulations of tinctures. They cover things like chronic pain, anxiety, sleep is a big component that products, and we also have our own CBD lotion. Again, it's a chronic pain formulation. Those are on the shelves right now. And those are products that we've also taken into local markets. We've got an initiative going on right now in Southern California that is going to be important for us as we're beginning to test getting the product line into big markets such as Los Angeles County. So it's not just internal distribution, but it's actually starting to touch on retail distribution in the massive markets like California. So we will continue to evolve our IP on the product side. We have a fairly deep library already of formulations and different product delivery systems that we haven't brought to market yet, but the IP has been developed. So product for us, I see it as a standalone division. If you think of our corporate layer as a public company, I see all things clinics running through the Sun Valley Health brand, corporate and franchise. I see product as a division on its own, serving domestic and international markets. I definitely see our extraction and manufacturing layer. And then the final piece for me is a little bit of the big unknown is what will data science and thought leadership and clinical trials look like as a subsidiary or division, with all of that being connected in what I refer to as our vertical integration, really controlling our own supply chain in domestic markets and international markets in the future.
And I could end the interview again right there and say, man, more layers of the business. But now we got the last layer, which comes from your own extraction facility. That's a hemp-derived facility, CBD extract facility in Portland. You kind of alluded to that. You took possession of it in the summer. You awarded the license necessary from Oregon State Department of Agriculture, and now you're on to the next phase. Part of that is, so I want to talk about the products that are going to be coming out of that, what they're going to be doing, but part of that is strategic partnership. You've got a letter of intent to form a joint venture with Heritage Cannabis. There's some really healthy terms in there. So let me ask first what people might be asking at home and then move into the actual facility. How is the strength of that LOI looking? And I ask because naturally there's a lot going on in the cannabis CBD space right now. There's a lot of consternation and some deals are being called off. So I've got to ask you, what's the strength of that LOI right now with Heritage Cannabis?
So the relationship with Heritage remains very strong. So Clint Sharples is the CEO of Heritage. He and I, we talk regularly. We're also working very closely with Graham Staley, who is the head of their extraction division called Pure Pharma out of Kelowna, British Columbia. And Graham is also a director of Heritage. So Graham, we've had him down to the facility. We've done complete walkthroughs. We've talked about what equipment we should be putting in there, what the timelines are. They are the experts on extraction. They're going to bring that know-how, those standard operating procedures to bear on this facility. The other thing that's important with the Heritage relationship is they're more capitalized, or they have a bigger balance sheet than we do,
Right.
and they're providing the initial capital for the joint venture. So it's a very complementary JV. Heritage gets to enter the US markets on the hemp-derived CBD side. We get to leverage their balance sheet. So together we're stronger for each other than just trying to figure it out on our own. To directly answer your question, we're working towards the definitive agreement right now. So we're at the stage of legal is involved on both sides. Our intention remains strong and forthright. We both believe it's the right thing to do. And we're just proceeding in good faith, hoping to get ourselves to the definitive agreement very soon. Graham and I and my operations team are working on specifications for equipment. What we've decided to do is we're going to actually acquire the post-production equipment first. So these would be things like gel cap machines, tincture filling stations, bottling stations, labeling, because we can actually source distillate and isolate locally in the Oregon market at wholesale prices, and actually start to manufacture our own product requirements, and we'll manufacture for the third-party relationships that we're both parties are bringing to the JV. The extraction equipment is more sophisticated and takes a little bit longer to order and set up. There's some lead time, but there's no reason why we can't utilize the 5,000 square foot facility. We're already licensed to start producing and getting to revenue in the facility sooner rather than later. So that's our plan right now.
So both myself and I'm sure people watching this would understand, where the revenue comes from when it comes to more, proprietary branded products inside Empower's clinics. So let's talk about the third-party partnerships out there. I'm assuming these are private label partnerships, white label kind of partnerships. Elaborate on that a little bit, but more importantly for everyone at home, do you have any sense of demand right now from third-party partners and how that might look in 2020?
Well, we do. I mean, I would start at the macro level on demand in the U.S. markets. I mean, there's many groups, Analytica, Brightfield Group, others who continue to support with real data, third-party data, that the markets are continuing to grow. I think, they're expecting a, $700 million CBD market in the United States in 2019, and expecting that to go to $5 billion in 2020. So at a macro level, the consumer demand is there. What that translates to with third-party brands, there's some brands out there that simply want to be CPG companies, consumer packaged good companies, serving the CBD markets. They don't want to be an extractor. They don't want to be a producer. Those are the types of partnerships, when I say third party, that are discussions that we're involved in. These are discussions that Heritage Cannabis are involved in. They already have some of these relationships in Canadian markets that have the potential to translate to U.S. markets.
So these are obviously strong brands, right, Steve? This isn't,
these
it might
household
be George's CBD product, Inc., I guess, but it sounds like you're talking about companies that have, some pretty good brands with their brand on it, and have you guys do all the extraction work?
Yeah, absolutely. These are big brands. These are well-known household names, large Canadian public companies, U.S. public companies, large privates. So it's not, we envision this. I mean, I would love to say to you that the Empower network for our Solievo lines or our Sun Valley Science lines that we carry in our clinics is eating up all our demand, because the brands have just, they're killing it right now and there's so much hype. I can't say that to you yet. What I can say is it is a great business model to serve third-party brands and continue to extract and fill and bottle their products and distribute it. We would take that business all day long. It's a great wholesale relationship based on, long-term contracts. So we expect a balance between filling our own requirements, and we'll see where that will go in the future, and filling the needs of great third-party partners. And to the extent that we can have all our capacity taken up, then we'll anticipate that and we'll just continue to expand our extraction capacity in that facility or in neighboring facilities if we have to.
So before I wrap up with my last question, just because of what you just said in that answer there, I'm going to push the envelope. If you can't answer it, don't. But I can almost, like feel people at home thinking, ask the question. Would you expect that meaningful, decent third-party, partner sales would begin in 2020?
Oh yeah, we already know that. So it's not that's quite easy for us. We're already working on. So as an example, Heritage Cannabis is a 30% shareholder in EndoCanna Health, which is the DNA kit provider. We've previously announced that we will be distributing the EndoCanna Health DNA kit program in our clinics and in our franchise program. It's a perfect add-on to the new physician-based modalities and services that we've launched. EndoCanna Health are also strong formulators because part of what they have created is a deep understanding of the endocannabinoid system and CB1 and CB2 receptors within the human body that they go down to the DNA level and look at genetics to understand how certain strains or certain products may be more effective for the genome type or the gene system within a particular individual. But what it also identifies are potential contradictions. And understanding contradictions can be as important as understanding what might be beneficial. So what EndoCanna are doing is they're creating specific formulations based on the data that they've been collecting. Those formulations come through us in our extraction facility. We create those formulations either for a third-party brand or even run them under our own brand under a licensing agreement with a partner like EndoCanna. So we're using our data science already to potentially improve and create new formulations based on the data and the potential efficacy of these cannabis-based treatment options.
Is anybody else doing that out there, or is that a huge competitive advantage that you've got, or other guys just packaging up hemp-derived CBD, throwing a couple labels on it and putting out into the marketplace just to get quick sales? Is anybody going that deep?
I hope that the industry does. I am confident that the concept of patching things together just won't exist ultimately. We are in a regulated framework here, so we've got new rulings that have just been announced from the USDA that we have to follow and watch carefully. We've got the FDA on a federal level. We've got FDA at the state level. So you can't just be a fly-by-night operator in this space, especially as a public company, and think that that's going to work going forward. It won't. You must employ analytics. You must employ data. You must understand the regulations and make sure that what's in your bottle, what's in your bottle, and what's on your label matches what's in your bottle, and stand behind your products. That's an important thesis for us that we will continue to abide by going forward.
For sure, and that for sure, but I guess what I was talking about was more just the using data to look at specific needs for specific kind of people and then formulating and packaging those. That seems like you're really getting down to the granular level. You're not just putting up generic, CBD products for, generic things out there. It sounds like you're really getting down to the granular level, unless I misunderstood that. If I didn't, who else is going that granular?
Yeah, so you didn't misunderstand. That's exactly what we're doing. This is a thoughtful process that we're going through here. It's not haphazard. We talk about these strategies and methodologies extensively as a board and at the management layer. I know that there are other great brands out there that are thinking perhaps in the same way. I believe it's a really important competitive advantage for our company, for what we stand for in the medical cannabis sector as a health and wellness or life sciences company. I believe it's an imperative for us, and I hope that we are a thought leader in the industry with this aspect, and we're taking a leading position demonstrating that you have to operate what I kind of call it in a pharmaceutical manner in our approach. For us to be a well-known brand, a brand that is a trusted brand with consumers, our customers, our patients at the clinic level, we have to demonstrate this professionalism in everything that we do at all times.
I tell you right now, you're demonstrating that in this interview by far and away. And I'm not just saying that because we're on.
Thank you.
I don't need to say that, but you speak a language. You speak in a cadence that differs from 98% of the small cap CEOs out there. So it's translating here. I have no doubt it's going to translate in the market. I'm going to leave with this last question, even though it sounds like you're probably going to have enough news to bring it back before the end of the year. I'm going to ask this question. Stock market for this space has taken a bit of a beating. Bad news coming out of Canopy. There's a lot of struggles out there at the really big mega level, and no doubt that's had some impact on your stock. So what do you say to your shareholders out there? Because you've got great experience. You go back to GE, and then you did some pretty spectacular things since then. What do you say to shareholders in order to separate short-term stock market performance from what the long-term vision is of the company, or what the long-term actual practical look is for the company?
I simply ask everybody to remain confident. We're remaining diligent in what we do each and every day. I know how hard all of our team members are working, and I so appreciate the efforts that they're going through. From the investment community, existing shareholders, just know that we're here representing you and your investment, and we care about it. I believe that we are in a time where, it's a bridge to a better market. I would argue that it's one of the greatest buying opportunities that this sector has seen since the concept of the sector, going back to the original sort of Canadian LP launches. And I think that, the companies that have real execution, real revenues, real revenue growth, and plans for broad-based revenue, so not singular, narrow business models that may be sort of fraught with risk, is diversification was important within limits. We can't be everything to everybody,
Sure.
But I certainly feel that we've lined up our business model, that we can layer on growth strategies and initiatives in spite of the challenging markets. We can replicate what we have and take it to other markets and other international markets. And we continue to entertain discussions about different markets, whether that may be South America, Southern Hemisphere, Europe. These are all potential developing, growing markets that could really add to the diversified footprint of our company. And it could provide us access to better capital, given that the current capital markets for particularly Canada and a bit of North America are currently constrained. So, we're looking at a variety of methods here to make sure that the capital structure remains solid. And I think, again, where I started is just remain confident in what we're doing. We've got the board, we've got the management layer in place. We're continuing to control our expenses, and we know what our revenue stream looks like on a very solid basis going forward. So stay patient with us. Just please stay with us going forward.
Well, Steve, I got to tell you, it's pretty easy to remain confident, especially after this interview. You're putting up the numbers. So before we even started this interview, you're putting up the numbers. Clinical revenues up 137%, patient visits up 211%, and these are up some pretty good bottom lines. You're not up 211% from one. So, and now following this interview and everything you've had, the extra layer, the context, the color you've been able to provide, I think it's pretty easy to remain confident, and you guys have earned that. Congratulations.
Thank you
for joining us from London tonight. You're around the world. You're working. It seems like every time we talk to you, you're in a different part of the world, and that you're in Miami for the franchise, for the franchise show. And now you're in London. So thanks for joining us today. Deeply appreciate it.
Thank you, George. We appreciate your time.
For everyone watching at home or listening maybe on our podcast on Spotify and other podcasters, you've been watching and listening to Steven McAuley. He's CEO at Empower Clinics. The company trades on the CSE and the stock symbol CBDT. For our friends in the US, EPWCF, that's on the OTCQB. And for our friends in Europe, on Frankfurt under 8EC. You've watched, you've heard some amazing material, some great information, not just about today's performance, about where this company is going. Now the due diligence is up to you. Start with Agoracom, get there, punch in the company's name or stock symbol, do your initial research, then use that link to the company's website to go over there and take a look and do your further due diligence, because it's definitely a company worth watching. You watch it here, you heard it here, the rest is up to you. Thank you for joining us. Thanks for giving us your time. Have a great day, and we'll see you next time.